Talk about certain things of how you could have took the trades during this past week and understanding with volume what is happening. So let's get right into the video. First thing is we got gold on the 1 hour chart. I mostly day trade more than I swing trade, but I will swing sometimes for a day or two. You can watch my other videos on stuff like that. So again, right here we have gold that basically is in a steep downtrend, correct? Been in a steep downtrend. Everybody's talking about it. So why do we have such a big push up? First thing is you got to look at the volume bars. So if you look at the volume, you're going to see what's happening. The first indication was to me after we had all this big bearish push down right here. We had this consolidation. This is look like in a redistribution area, and we had the huge push down after we broke through all this. Now, the key factor you want to look at is two things. So the first is volume kicked in right here, and why didn't we go long here? There was no confirmation to go long whatsoever, not on the 5 minute, not on the 1 hour. Even though you had this hammer candle, as I say, hammer candles sometimes are fake hammer candles, and they happen just to gain liquidity in the market so market makers can grab liquidity. I'm not going to go into details. I just want to go into the trade. So we had again the push down. Now we came into a way stronger zone that we haven't broke through since March 8th of this month. So we came down and we just slightly touched the low. When we slightly touch the low, what happens is volume starts to kick in. So now for me, I was starting to look for long positions because of this zone right here. And we had a bullish reaction. We had the touch all the way down through and this zone with a bullish reaction. So now I'm looking for longs. I didn't take this trade. I'm not going to sit there and tell you guys I took this trade right here. I missed this opportunity. I don't chase. When I seen the markets, I seen it already in this area right here. I don't chase breakouts. I'd rather buy it in this area and have a stop loss over here. So what happened is this. This is how you could have took the trade if you were watching it properly. You came in and volume kicked in as soon as we broke below this high volume right here. We got pushed back up. The reaction wasn't proper though, but the volume bar was high. So on the 21 time, you can see 36.17 over here. 36.17. We go back 2 days, 21, and you can see it's 21.99. Go back another day, and you can see it's 24.50. So this is a high amount of volume for that time of day, and the reaction wasn't great. So I wouldn't enter this trade at all, even if I was watching it. But then things started to show up a little bit differently, which is volume also picked up as soon as we push back down again on this 22. You can go again back and you can see 22. This is 1742. You can see at 2184. Go back over here. 1070 at 22. So again, there's high volume to the downside. So on the 1 hour, you had a no demand show up right here, confirmation right there. This is a long trade. This would have been a swing proper trade. This is how you could swing. This is one of the ways that you can swing on the 1 hour for no demands to show up. It's a little bit more difficult than what it is on the chart because you are trading a day or two. So you got to be very precise. You got to know what you're doing when you're doing 1 hour, no demand or no supply. Me personally, I just stick to 5 minutes and that's how I trade. So we can go to the 5 minute and let's see what it is. I'll talk about this trade over here in a little bit, but let's look over here. So this is what happened. This is all that no demand right here. It's just there's no selling pressure anymore at all. So that means there is nobody going to sell the market, and at the same time there is no longer basically liquidity. So all the bears know they can't get price to drop anymore. So if there's no more stops to be hit, that's it. It's time to go long, time to change positions. Your bias in the market can always change. It does not have to always be long or bearish. even if the trend is telling you some other way. Of course, this is for a little bit more advanced trading, but this is how it goes. So, for example, how would you have taken this trade? This would be the best way to take it. As soon as we broke above this area right here, this consolidation right here, because of this strong volume right here, as soon as we broke above right there. I'm not telling you to take the trade when we break, but as soon as we break above, now look for an area to enter the trade. So look for a pullback. So there's two ways you can do this. You can draw a fib like this. Okay, from the top, it's the 5-minute, remember, from the bottom to the top. Now our pullback came into roughly the 6-1. So now for me, I'm going to look for a no supply. So did we get any no supplies as soon as we touched? Let's look. We didn't get anything here, nothing here, nothing here, nothing here. We got something here, no supply, but the problem is it's not confirmed. It cancels itself out completely because of the fact that it went below this candle right here. It's automatically canceled. You cannot look at it anymore. It's completely, you take it off of your fact that it was a no supply, even though the volume bar was less than the previous two, because there is no confirmation. At the same time, the next bar after closed below it. It's gone. Still nothing. Still nothing. But we're starting to see volume increase. Look at this. We're starting to see volume increase as soon as we come back down to this 50 level. We get a push up bullish reaction. Very much indication that there's something happening. So now look what happens right here. We have a no supply form right here. A little bit higher than I'd like, but it did form. Confirmation right here. And you could enter the trade right here. You can put a tight stop loss. If you're not comfortable with it being below here, I would say you would be at the halfway point of this high volume bar right here. So a little bit below the halfway point. So about right there, you're risking. And you enter the trade and you go long and you start to move your stop as soon as you see breakouts. The thing is, you would have got stopped out here. So at this time is now New York session. New York will play with the market because of there's so much more liquidity there. So they're able to push markets where they need to push to gain price. So they came back, they pushed it back to the 618, and they took all the stops right there, which is fine. It happens. Risk management is key. It came, took them out. Then we had a no supply. This was your main no supply to enter the trade. I did not enter this. I was not paying attention to it. I had other trades open. I'm just telling you what happened. I'll show you the trade that I did go in with gold, and I spoke about it before. But you had the no supply right here form. You can see this volume bar is less than the previous two right there. Confirmation right away. When this happens, you are basically in a very strong position because it happened right after. You enter the trade right here, stop loss below here, and you ride the wave. So you had a pushback down. Again, you had a pushback down. You had another no supply form. Confirmation right there. You enter again. That's two trades right there. You're in. Start moving your stop loss. Now your risk management is less than it was down here. You're in two trades because, and you start to ride up. You wait for pullbacks if you don't have a specific target. Your specific target should be this area right here or this area right here. It went up so fast. Nobody was expecting this. I never expected this. And it kept on going up. The problem is volume kept on increasing as we went to the upside. That's because stops were getting hit like crazy. As soon as all these short positions that were coming down from here, that were here, got hit, that were here, got hit. They all kept on getting hit, so that's why volume kept on increasing, and then it slowed down as the end of the day came, and that was your trade. The trade that I took is right here. The reason I took this trade is because of the fact that look at what happened here. We had a push down as soon as volume came down. Price is coming down. Volume is starting to increase slightly. So now we have another volume increase right here. Fake break, push up. This is not my trade. I would never take a trade at the end of the day. So all of a sudden you have something like this form. Now we're coming into the Asian session. So we came into the Asian session right here. Now I'm starting to watch this trade because, Japan is about to open, Australia is open, markets are starting to flood into liquidity. So nothing as much, of course, as London or New York. So you got to be very careful how you trade these. You should always trade probably about half of the position size you usually trade during a New York session. So what happened is you had this push down. Let's get a zoom in so everybody can see. We had price is decreasing here. Volume, as price comes down, increases. Price comes down, and then your volume increases. Again, price goes up, volume decreases. Price comes down, volume increases. Repeating. So now I'm watching this. There's something happening. One last attempt to push volume down and to push price down on a high amount of volume right there than any of before. And look what happened. You had a no supply form right after. It could never break before or below. I had a stop loss below here. I entered the trade right here because we had confirmation, and I rode this thing and then re-entered again right here because another no supply formed confirmation over here. We entered. Move stops to break even. I want to talk about the GBPUSD real quickly, just on the 1 hour in the beginning of the week last week. Same thing. This is a short, no demand. Yeah, you could have took. You can see we came into this institutional candle that came up right here, and this was the last push up that we had previously before this push down. This is the trade that you could have took. You had push up on the 1 hour, push up with volume, came all the way here, push down. Volume is starting to decrease just because of the time of day. This is the hour after London Open, and then you're starting to have bearish reactions to the downside. So let's look at that right there on the 5 minute to see how you could have took that trade. It's right here, and this is how you can take that trade. You see volume came up again into this area. We came fake break above. Look, you can see volume push up, reaction bearish, volume slightly push up. You can see it right here, nothing crazy. This is with time experience of seeing how volume reacts in certain areas. You'll understand the amount of volume you need for a reaction. There is no need to have a lot of volume because we already had the liquidity grabs all right here. And again, to grab a little bit more liquidity for anybody who took short positions here, take them out right there. Again, we have bearish reaction with less volume to the downside, push back up, volume slightly increases, more increases, and then take out stops here. This is your entry right here. This is a no demand candle, confirmation right there. Never close above, so it's still valid. No demand right here, never close above, came, took out stops, and then the third candle after is your confirmation to enter because it closed below the next two candles. Enter right there, stop loss above there, came back down. Again, reattempt to touch that no demand. Another re-entry could have been taken here on a proper risk management, and we came to the downside. Your target should be in this area right here. Profit taken out right here, and we started to go sideways pretty much after that. Please subscribe, share, like, comment below. I will answer any questions. I really will answer any questions. I like people to learn. I'm not selling you guys anything. I just like the community-based thing of proper trading, the way I like to trade. If anybody have other recommendations, leave them in the comments below. And peace out.